The Asia wealth teams were supposed to be sort of safe from these cuts. What happened?
Well, that was the initial plan, Sherry, or at least the stated initial plan. We all knew that when a merger occurred, there were going to be job cuts, right? And UBS had targeted as many as 3,000 domestically. We didn't know how many globally UBS would be targeting, but certainly the Asia wealth management part of things was supposed to be a little bit safer. Now we're hearing from sources that there will be job cuts. However, it will be fairly low in terms of the numbers, low hundreds, perhaps even around 100, though that number hasn't been finalised. It will all likely be done by November, though. Bear in mind, UBS did have about 850 private bankers in the region at year-end, while Credit Suisse had 580. So if you put those two together, it is a behemoth. That's more than 1,400 people right in the same area. And that's more than their rivals, DBS and HSBC combined. So they were going to go all out in the region, but now, of course, with slowing China growth and muted activity, as we've seen over the last several months, those plans have clearly changed.
Have we seen anything more specific when it comes to the layoffs? What would they be concentrated on?
Yes, a little bit more specific, Heidi. Hong Kong and Singapore, for the most part, is what we're hearing. One source says that those in India and Australia are safe, at least for now. The pity of it all is that the Chief Global Wealth Officer, Iqbal Khan, had thrown a big celebratory engagement back in June after the merger happened and after everything had closed to try and rile up the troops and sort of go after that big market across Asia, not just in Hong Kong, but Singapore and right around the area. It had been earmarked as one of the regions to be spared deep cuts and to sort of inch up the revenue piece by piece. But now, obviously, those plans have changed and some of those 1,400 are going to be let go, primarily in Hong Kong and Singapore.